thing that people are a little nervous about is deurbanization in the future. So it's the idea that work from home, even if it's not full work from home, like 1 or 2 days, people will be more comfortable living further out, like along the GO train stations. It's not as expensive to travel to downtown. The idea is that people would want to live in a bigger place with maybe a balcony, a proper office, rather than like a one bedroom in Toronto for 2K. You have to look at it more as a structural headwind, which is to say it might not happen in the next, 2, 3 years. It might not happen in the next 5 years. But at some point, if it does happen, you're going to see lower rent prices because there's going to be less demand. And as an investor, it's a very long-term thing, right? It's a dividend play. So anything that jeopardizes future of the REIT would take down the multiple, right? Whereas if you compare it to before the crisis, the rents were going high and like a slowdown wasn't anywhere in sight. Now you have this sort of tail risk where if this does get realized, which we're not sure it will, um, it could really harm the future profitability of the REIT. And as long as that risk remains, there's no way I would recommend ever leveraging up in something that's already levered, like properties, right? Sort of this risk abating. You won't see people being as aggressive in these stocks. Like even if you look at CMHC's forecasts, they forecast the condo market and housing market to decline in Toronto. But we actually seen the opposite so far. So it could just be low rates and like a flood of money from the government. Like I'm not too negative on what happens after, but it's the risk. Apartment REITs in general, they weren't hit as hard compared to commercial, to like retail specifically, and also office. Because if you think about it from a big picture, people are still going to live in homes or apartments, and it's a very temporary thing. And then all of these REITs are well capitalized, but they also have a ton of property they can use to finance further debt should they have liquidity issues. So in general, apartment REITs, they're not as highly valued as they were before the crash, but they didn't suffer as much. So their valuations are actually pretty fair, all things considered. What happened before was apartment REITs, it's pretty much the most stable equity class you can come across, like along the lines of utilities. So what people did was they leveraged into the trade to play off the yield. So the idea is it's highly unlikely they will ever lose value because property was still going up in Toronto and Canada in general. At the same time, you do have uh, a dividend cash flow coming to you, right? So what can you do? Well, you can just leverage it up because it's really, really low risk. And so by leveraging up, you drive the price up until something bad happens, in which case everyone delevers, they start selling, and now we're at a more fair price. Now, could people leverage back up going forward? Yeah, that's very possible. So why don't I like the name? If the situation was one where people would start levering back in, there are better opportunities. Let me add one more thing for the REITs in general. So one of the big problems, one of the reasons why apartment REITs won't increase in value for probably at least another year or half a year is because if you look at their collections and if you look at their occupancy, it's been stellar, right? It's been like it barely changed. And the collection is like 98%, which is insanely high. For most of the REITs, fluctuated around 1 to 2%. US is a little different. Uh, so it barely changed. And then the collection rate, which is the amount of money they're supposed to collect from all the tenants, like how much they actually got, it's been pretty high. I think in Canada, the average is like 97%.
Well, that was also when in Canada, for example, you have CRB. So the first place the money goes is going to be to shelter and food.
Exactly. And that's the concern people have. There was also, they forbade landlords from evicting their tenants. And so the question people have is, are these numbers inflated? And if so, by how much? So if the CERB program ends, which I think was extended for another 4 weeks, if
Yep.
that ends, if the tax deferral ends, if the ban on evictions ends, what will it look like after that? Not to mention, a lot of these companies, a lot of these REITs have deferral programs, which we don't know if people actually pay. So the question is really, what is the true impact to the economy um, without these programs?